Hello dear traders, petar.jacimovic here from vikinganalysis.com. I want to post the update on my new position, the Euro New Zealand dollar. I'm still holding the USD position from yesterday. If you follow my work, you probably know that I'm again bearish on the USD, and I'm also bearish on USDN still, and I added a sell position on Euro New Zealand dollar right now basically. So I want to inform you about this. Basically, this analysis and this entry is based on the pure price action combined with volume analysis and moving averages as well. So I used the classic supply demand zones, I used the pin bar, and I found also channel in the background, the broken upward channel. So all in this combined, I hope for that I can take 1 to 3, 1 to 4 ratio at least, which I'm aiming for. Okay, so let's start and observe why I'm bearish on this currency pair. Why is my advice for you that you watch for selling opportunities on this currency pair, at least in the short-term perspective in the next few days. So first of all, we got this upward, very nice upward channel in the background at this stage, as you can see here, in this area here, and the price, we saw the breakout. I saw this breakout of channel in this area here. This was a first sign of potential changing in trend behavior from this point here. It is still not enough clue. Just one breakout doesn't make basically the trend to reverse immediately. It takes time to reverse and to go from bullish to bearish. So this was a first sign that something happened, and that buyers don't support anymore this upward movement on this currency pair. Price went, basically this is a 200 MA. Most of the time I use usually, of course, like standard moving average in the short-term trading, like 50, 100, 200, 21. So I really like to see where are the averages, but again, this is most of the I use this just for the larger frames, like daily, weekly, 4 hour, for example, because they're very powerful if you know how to combine the moving average with price action and other factors. So basically, after the breakout of the upward channel, the price went to test 200 MA. As you see, price stopped there, creates some pin bar here, and then price back here. Since we already saw the breakout in the background, we know that something that actually the buyers don't support anymore this upward movement. So we had a good opportunity to short. The price went a little bit here, 75 pips, and then we got another downward leg at this point here. Very good downward leg of 200 pips. Price also tested 38.2 Fibonacci retracement at 1.5, 555. This was a pretty much a sign that we changed basically behavior, since we went from bullish and we got a lower swing high, the first lower swing high at this stage in 4 hour time frame. So this is for me a good sign that this is this is a very good, basically this is a sign that this is changing in trend dynamic, this confirmed changing in trend dynamic from bullish to bearish. Once we saw this, we don't want to sell the very low points or need the lowest points. We need to see some weakness and some reaction, of course, to have the qualitative setup. And of course, if you wait and if you have the patience, you have a very good chance to establish the good position. So never afraid that you missed opportunity. If you see the strong downward price and you think that, for example, oh my god, I'm late, in this setup, should I sell it immediately here or no? No, you need to find, you don't want to basically to sell on the lowest bars, which created the lowest low points, So you want to see some weakness, some pin bar, some uptrust, so pin bar, uptrust, or bearish engulfing patterns, bearish outside bar patterns, whatever is, just to see some weakness there. And the weakness basically came at this bar. I will I zoomed you in here. So you see this pin bar here, this here pin bar. This pin bar basically it's 75 pips, just in this shadow, this weakness, shadow of the bar. This is a massive, okay, this is also a sign of the weakness, because the price basically started here, it went lower a bit, 32 pips, and then back higher, 90 pips from this where the candle opened here, and then went 90 pips, and then closed just 15-13 pips above. So this is, and what is actually very interesting here is that this pin bar confirmed this swing low resistance. This swing low became a resistance once it's broken. This is a general Western rule. After that, it confirmed also the supply trend line, which came from this stage. This is a supply trend line for most recent price action. It confirmed this because the price exactly stopped there. What else this confirmed? It confirmed the absolute rejection from the slope of the moving averages there. We have, I will zoom you out here. You have a 200 MA, you have a 50 MA, you have also this 21 MA, all in the similar place, and the pin bar basically went through all of these moving averages and then back here. So you have a lot of resistance there. You have in the background already broken upward channel, which make this very powerful setup. Of course, it's nothing 100% sure in the forex, but this is a high probability setup. I call this high probability setup. So you use the pure price action, you use the technical knowledge about the channels, you use the moving average, you also use the volume. So notice the volume here. Notice the volume on this pin bar. It was an ultra high volume on the tick bar. It was also on the futures market. It was an ultra high volume there. So there is a massive volatility there. It's not just that price action basically was strong. It was the massive activity as well there, followed by strong reaction on the price action. So this is what I really like, and this is what I advise all my students and all the traders to watch for a high probability setups rather than trying to force the setups and trying to, you know, trade very messy price action and not so powerful. In this setup, basically I risk about 80 pips. I risk about 80 pips, 85 pips, and I will try to take at least 1-to-3 ratio, but I'm aiming for 1-to-4. Okay, I'm aiming for 1-to-4 ratio, maybe even to 1-to-5 ratio, because absolutely, if there is no any strong reversal signs or something like that, so far, of course, this is a 4-hour time frame. This will take maybe even a few days, maybe even 7 days, but this may take a few days and so on. But I'm aiming for again 1-to-4, 1-to-5 risk reward ratio. So my take profit is this is in this 78.6% retracement near the 1.5275, 1.5280. But of course, the key demand zone, key cluster there is sitting around 1.520, 1.505. So this is a very low from this channel. So again, strong price action is strong price action combined with moving averages and in the broken upward channel in the background basically gave the very powerful setup. And stop loss, of course, you can place above the pin bar, few pips above, because it's a very simple. If the price got the power to reach all the way here, something is wrong there, and it's better that you exit the setup. You don't want to when you have pin bar like this, you know, and this sign of weakness, this ultra high volume, and you have all the other factors involved here, this is a very bearish. Then if the price go all the way to pin bar, something is wrong there, and better watch for new opportunities, watch for other currency pairs, and you know, just take the loss if that happens, of course. If not, then you just need to to follow your setup. I will not advise you to secure at least at 1-to ratio. You need to secure. You need to let the space. You need to let the price space to breathe. Let's say. You know. So if you secure very early on the swing low or something like that, it's very early to secure. For example, you need to let the price to make a decision, and once you see the strong downward momentum and the price really go 1-to-2 ratio or 160, 200 pips, then you can possibly you can secure, and then you wait. And depend of your style, of course. You can take even 1-to-1 risk reward ratio if that is your style, but my advice is to watch for at least 1-to-3 ratio when you have these powerful setups, and in the trend setups, which is also very important. I basically like to trade in sync with the trend because the probability is much stronger, and the risk reward ratio is you can easier achieve the large risk reward ratio, of course, in the trend, when you trade the trend setups, which I prefer. So again, this analysis is based on the price action, volume analysis. I use the moving averages. I found a channel there. So this is again, this is all about what I wanted to share in this video, and I hope that I helped you to you know, to establish position. Of course, never extend the risk. There is always risk on the forex, and you need to keep the risk in control. As long you are comfortable, you can put 1% risk, you can put 0.5% risk, or even lower, or you can put 2% risk. If you know, sometimes I put 2 to 3% if there is a really strong setup I really like. So, but usually I trade a 1% risk, 1-to-2, and I'm aiming for minimum 1-to-3 ratio. Again, if you want to learn my method and how I combine the different aspects of technical analysis into one, of course, you can contact me on you can follow my work, you can subscribe my YouTube channel as well, and you can supplementary program, 7 days course, of course, if you're interested. That will be all for this video. I hope you enjoyed. I will be stay tuned, because I will update you how we progress in also in the USD and Euro New Zealand dollar, and I hope we will do good. Wish you good trading and have a nice day.